Good afternoon and welcome to the Asian Midday Market Watch. Our guest today is David Koh, founder of the Smart Investor out of Singapore. David, on a Friday, always good to have you on the show.
I know, TGIF. Oh, by the way, Brian, I think people should be allowed to listen to our pre-show conversations to hear what we talk about before we actually go live. I mean,
And it's
it,
always very entertaining, actually.
it is,
We
yeah.
should probably do something along those lines. Now, David, before we get your sagely wisdom, I'm going to take a look at crypto markets. And then after that, we'll take a look at how regional markets are performing. Now, we start with Bitcoin, which is at 62,114. It's down 0.92%. Ethereum is at 4,534.68. It's down 0.97%. If you look across regional markets, we've got the the Nikkei, which is at 29,585.05, it's down 0.7%. The Shanghai Composite is at 3,518.57, it's down 0.24%. The Hang Seng is down to 24,000, down 0.95% at 24,985.05. The ASX 200 bucks the trend, it's up 0.43% at 7,459.80. The Kospi is at 2,967.59. It's down 0.52%. Now, closer to home, we've got the SGX, which is up slightly at 0.58% at 3,238.49. Rounding up the numbers, we've got the FBM KLCI on Bursa Malaysia, trading at 1,525.81. It's down 0.36%. Now, David, what's your view on market performance this morning?
Well, I think there was a bit of catching up to do, given that both Malaysia and Singapore were on holiday yesterday. Happy Diwali, everyone. So there was a bit of catching up. And I think in general, what you would say is that most of the stock markets are kind of marking time. They were digesting what the central banks had to say on Thursday. And I don't think there were any huge surprises for people. So we heard from the US Federal Reserve, we heard from the Bank of England, and we also heard from the Bank Negara Malaysia this week also. And there was a lot, I think, for people to digest.
They obviously, so just to recap, the Bank of England yesterday passed up on a chance to raise interest rates. So that's one factor. The Federal Reserve announced it would begin its tapering program, but Jerome Powell said, no rush to hike up borrowing costs. And then, of course, we've got the Bank Negara decision as well. So what's your view then, David, on what this means for us ordinary investors?
Well, the thing is, central bankers are cautious by nature. And I think that came out from the statements from all three of them, from the Fed, the Bank of England, and Bank Negara Malaysia. They know that there is inflation in the system, but they are very reluctant to do anything about it. They told the markets what they wanted to hear, which is that if there is a problem, then we have the tools to tackle inflation. But when you see inflation in the system, and you have a look at the inflation numbers in America, I mean, it's at a 30-year high, 4%. To some people, 4% might not seem like an awful lot, but for many younger people, when they have a look at it, it's a 30-year high for inflation in America. So some people are questioning, how can Jay Powell and the Federal Reserve be so complacent about inflation when they know it is in the system? But at the same time, there was something that was said by Bank Negara, which I think was brutally honest. And it was something that neither of the other two central banks addressed. And Bank Negara said that there could be the reimposition of restrictions as a result of variants of COVID-19. Now, when you hear that, you just think, wow, Bank Negara is ahead of the curve, and they're also willing to tell people what is likely to happen and why interest rates are not going up. In many ways, for those of us who are long enough to remember what interest rates are there for, they're meant to keep a lid on inflation. I mean, how can you possibly keep a lid on inflation when the Bank of England has interest rates at 0.1%, and when you have the Federal Reserve with its interest rates at 0.25% when inflation is about sort of 10 times, 20 times higher than that. It doesn't make any sense. But I think Bank Negara Malaysia was absolutely right when it said, we don't know enough about COVID-19, we don't know enough about the variants, and let's err on the side of caution.
Yeah, again, so to use a specific example, the UK rates are soaring for COVID. I'm not sure what it is exactly, but they predict that it would hit as much as 100,000 pretty soon. So obviously that caution is in the back of their minds, but Bank Negara has come out and basically said it. Now, David, on closer to home, however, we've got stellar earnings from Singapore's banks. So today, DBS Bank reported a net profit of 1.7 billion Singapore dollars from July to September. Now, that was 31% higher than a year ago, exceeding the forecast of 1.57 billion. OCBC and UOB also reported third quarter earnings that beat expectations. Now, what's your take on it, especially is it really a barometer on the broader recovery within the economy?
I think it's more a reflection of how bankers see 2022. 2021 is almost over. I mean, these are third quarter numbers. So barring any kind of shock, I would think the Q4 numbers, the full year numbers for these three banks are going to be okay. What they've actually done is all the provisions that they made for doubtful debts, for bad loans, loans going sour, they've added those back to their profit loss account. So they made provisions and they're saying, well, those provisions weren't entirely necessary, so we're adding that back to our profit loss accounts. And consequently, you saw in the case of DBS, profits up 30%. In the case of OCBC, profits were up over 50%. Over 20% for OCBC and over 50% for UOB. So that is a reflection of the caution that the banks had. What is going to be interesting is what is going to happen next. Are interest rates going to go up? Because those will be the main drivers for the profits for these banks. If interest rates don't go up, then of course, I think we could see 2022 a mediocre year for the three banks, and not just for them. I mean, I'm looking forward to the results from Public Bank in Malaysia this month, and also from Maybank, which is also due out this month, just to see how they have performed. And if they perform in the same way as all the other banks around the world have performed, then I would think that the results are going to be good for 2021. What 2022 is going to bring really depends on what the central banks are going to do next. If central banks don't increase interest rates, then I think we could see not that great results from the banks next year. But if the central banks do increase interest rates, then that gives them a chance to the banks to increase their own interest rates and to increase that net interest margin that is so important for them to drive profits in the future.
Now, David, as always, thank you very much for your insights and thanks for coming on the show. Now, we've been speaking to David Kuo, founder of the Smart Investor in Singapore, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Please check out this video and podcast on various social media platforms, as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thanks again for tuning in.